hope everybody's well today. My name is Matt Garland, NMLS number 58700. And today we're going to talk about a subject that I get a lot of questions on is, can I buy a home if I have outstanding tax liens? But before we get into today's topic, I need you guys to do me a really huge favor, all right? If you like the content on my page, please make sure you're smashing that like button. Make a comment. I respond to the comments all the time. Most importantly, I need you guys to subscribe, hit the bell for notifications, and share this with your community, right? Because that's the only way that people are going to learn. If you guys who are watching this today are going to share it with your community, all right? Now, let's get back to today's lesson. IRS tax liens. Whew! Nobody likes them. Nobody wants to pay taxes, right? And one of the best things about being a rental or a real estate owner is that you get a lot of tax benefits. But most people who are business owners, maybe a 1099, whatever the case may be, you may have an outstanding tax lien. And most people think this will stop you from getting conventional or FHA financing. And the truth of the matter is, it won't stop you. The only way it will stop you is if you are not paying your taxes, okay? So, if you do have outstanding debt, tip number one, call the IRS. Get into some sort of payment arrangement, all right? Once you get into this payment arrangement, now you have a better opportunity to get approved for financing. Now, let's take a little bit of a deep dive into the two most popular traditional mortgage products out there, which is FHA and conventional loans. And let's do a little bit of a deep dive and what those requirements are for those programs if you have a payment arrangement. So let's get into FHA guidelines. FHA says if you have an outstanding tax lien, whether it's state or federal, you must enter it into a valid payment arrangement with them. Your lender is going to need to see proof of this payment arrangement. So you're going to have to make sure that you have proof of this. You can't just tell a lender, hey, I'm making payments. No, you must have documented proof of your payment arrangement in writing from either the state or the feds. That's number one. Number two, that monthly payment must be included into your debt to income ratio. So for those of you who don't know what DTI is, it's a very simple formula that you have to use to calculate your DTI. You use your principal and interest payment, your monthly taxes, your monthly homeowner's insurance, and plus your monthly PMI. That together equals your PITI, right? Your principal, interest, taxes, and insurance. Plus, you have to include your monthly payments that's reported to your credit report, i.e. credit cards, minimum payments, your car loans, minimum payments, if you have student loans, whatever those student loan payments are, that all has to be calculated. Now, now car insurance is not including that. Child care is not including that. The lender doesn't look at any of those outside things like your utilities. We don't look at that. We only look at what's reported on your credit report. Now, you add that number up with your mortgage payment, that brings your total debt. Now, you divide that total debt with your gross monthly income, and that's how you figure out what your DTI is, right? So now, your monthly minimum payment with your IRS or state payment arrangement has to be included into that calculation also. Now, with FHA, it states that you must make at least three monthly payments before you can get approved for an FHA loan with your outstanding tax, state, or federal liens. All right. Now, let's just say you have a $500 monthly payment for your tax liens. You can't just say, here's $1,500. Now I can get an FHA loan. That won't work. That's a big no-no with the feds. All right. You have to make three consecutive monthly payments. So let's just say we got January 2020 coming up, right? So you got to make a payment. Let's say you got into a payment arrangement December 1st, 2019, your first payment due January 1st, 2020. You need to make a payment January, February, and March. And then you will be eligible for a FHA loan. The lien holder, which is the feds or the state, must agree to be in second position to the FHA mortgage on your deed. Now, second position is very simple. You have your first mortgage. is in first position, and now the feds or the state have to agree to be in second position. Now, from my experience, that's not a big deal. They will agree to be in second position because now they know you have an asset that they can attach your lien to. So no matter what, you have to pay them because now they're on your deed of your home. So if you try to sell 2 years, 3 years, or whatever the case may be, guess what? They have to get paid. Conventional loans is a little bit different than FHA, right? A little bit more lax, but there's a one kicker with the conventional loans. So let's talk through the easy stuff first, right? Number one, you have to be in a payment arrangement. Number two, whatever that monthly payment is for the IRS, it has to be included into your debt to income ratio. Number three, the best thing about the conventional loan is that they don't require you to make 3 payments prior to closing like FHA. You can only make 1 payment with a conventional loan, unlike the FHA. But the kicker is conventional requires that the county that you're purchasing the home in, you cannot have any federal tax liens filed in that same county. So if you're buying a home in Nassau County, Long Island, you have to make sure that there's no reported tax liens in the same county that that house is going to be located in, or that can disqualify you for a conventional loan, and then you may have to go with the FHA loan and wait till you make that. What does this mean to you as a potential home buyer who's looking to purchase a home, right? You do not have to pay off the full amount that you owe the IRS. You just have to be in a tax repayment plan, and it has to be documented. So do not let the fact that you owe money to the IRS stop you from your real estate goals. There are options, there are solutions here for you. And if you have any more questions about this particular subject matter, please feel free to reach out to me. I have links down in the description where you can get a free consultation, or if you're ready to apply for financing, there's going to be links down there where you can go ahead and we can start that process of getting pre-approved. Make sure that you go through all my playlists. I mean, I have a playlist called Rants and Gems. I have mortgage education. I mean, there's tons of videos filled in my playlist that can answer all your real estate finance questions. MG the Mortgage Guy's YouTube channel will be the #1 source for real estate financing here on YouTube. So go through my playlist, videos uploaded almost every day, lots of information. Let me know if you have any questions. If you like this video, like I said in the beginning, make sure you like, comment, subscribe, and most importantly, share this with your community. My name is MG the Mortgage Guy. Until next time.